Hey, good morning, everybody. Sorry I missed you yesterday. I was in a training on options and that kind of stuff yesterday down in Boca. Learned a lot of new things. Some technical analysts were there giving us some insight on technical charting and that kind of stuff. So a great day of learning some new techniques when it comes to being able to trade. So as we get ready to start today, though, we know that yesterday was a great day. I'm sure Dave's going to have a lot to say about that since it was good day yesterday and I wasn't here. And today we're looking like we're going the opposite direction. So good things there. But before we do get started today, we are seeing lots of ups and downs in the marketplace. We've been seeing that now for a little while. And so I think it's important that people understand market corrections and how they work and what they mean. And so we put together a free report called Understanding Market Corrections. All you have to do to get your free copy is text the word market to 863-285-3815. That's right. Just text the word market to 863-285-3815. Hey, I'm looking forward to today. Dave will be with us here in just a moment.
That is poison there. 8:39:21 before 9. Let's check in on your money and see how Wall Street's doing this morning. Well, we've been upsy downsy, and we've been wondering what's going to happen next on the Chinese trade war. Let's plug in and see how it's affecting us. Phillip Statler is in his office today at Statler Financial Services in downtown Sebring. Phillip, good to have you back this morning. How you doing?
Hey, I'm glad to be back, Dave. Did good. Had a day's training yesterday on just how to trade stocks and options. Actually, it was kind of an interesting class I was in. So good information there on charting and technical analysis. And so, and I see you did a pretty good day yesterday. You managed to get the markets up today, and I figured I was going to get blamed for today because they seem to be retreating this morning.
We're into that thing. Gossip comes out of the White House. Things go up. Things go down again when the gossip goes the other way. Yesterday, everybody was saying, oh, the world's a happy place because they gave that cell phone company in China a pass on, at the very least, doing business with companies that they had done business before, which kind of saves Hui's butt because all of a sudden now they can get their Qualcomm chips. Well, we turn around this morning and we're talking about adding a bunch of other companies onto that Chinese blacklist, including, I gather, one of the big security companies over there, which is tanking big time this morning based upon us adding them onto the blacklist. Our technology, if they can't steal it, they're kind of crippled without it, aren't they?
Yeah, definitely. I mean, I think as that list continues to grow, it's going to put more and more pressure on all the markets across the world because, if they can't transact business here in the United States, it's definitely going to hurt their top and bottom lines.
Absolutely. And a lot of those high-end microchip stuff, yeah, the chips may be manufactured over there and in Korea and in Japan, but a lot of the technology that develops those chips originated over here, and that's the stuff that we've been accusing China of stealing. But the bottom line is if they can't get it legally and they haven't stolen it, it's really crippling to a lot of those manufacturing concerns over there. Cell phones are the poster child, but now we're looking at a security system company that's absolutely in conniption fits too off of that. This could get ugly as time goes on.
Well, it definitely could, but there's other things in the macro world that kind of look at our markets. And one of the things that came in yesterday, I'm sure it was after you got off the radio yesterday, was, existing home sales came in.
Yeah.
And they missed. That was one of those things that just wasn't. Existing home sales missed by about, not quite 0.2%. But still a miss when it comes to existing home sales, which is just, kind of a slowdown in that marketplace we've been talking about over the time here. The other thing that I think is interesting, I saw in a headline, is that mortgage refinances, which haven't happened much lately, surged by 8% last month. And so because mortgage rates are the lowest they've been since January of 2018.
That's interesting. It kind of dovetails. I started getting junk mail suggesting refinancing my mortgage starting about 2 weeks ago. After about a 1-year dearth of any of that junk mail, I was wondering if that was going to be an indication that we saw change on the financial markets.
Yeah, so I thought that was interesting to see. And then we've got new home sales come out, I think, tomorrow. We've got the Fed coming out today. So we do have some news coming out, but we've got some earnings today, and we're talking about housing. So let's just jump into Toll Brothers.
Yeah, let's do that.
They're
Something that'll verify or otherwise, won't it?
That's right. That's right. So Toll Brothers came in 12 cents ahead of estimates, and they also beat on revenue. So now they did say, though, that they expected their profit margins to come under some pressure because of the slower housing demand and some increased incentives that they're having to dole out to people to get them to buy homes. And so they are trading down this morning by about 5%. But I think it's not because of what they've done, but because of what they see in the future.
Understood. Tell me, that beating of the street, that's good news, but was that something you brought up before? Do you have the absolute numbers as to whether or not they compare favorably to prior year? I'm kind of curious, especially on a big one like a home builder.
I don't have last year's numbers. I didn't get the real detailed report yet. It's
Okay.
kind of just a brief overview.
That was kind of a curveball, and I apologize, but given the fact that it's housing, it kind of struck me as a question that I was wondering if it was on the top line on the report.
Yeah, and then you dealt with Home Depot maybe yesterday, but Lowe's came out today, and they missed by about 11 cents a share. Both
Ooh.
revenue and same-store sales, though, were above what Wall Street had forecasted. So they missed on earnings per share. But here's what's really hurting them today is that they lowered their full-year forecast. Again, they're saying they're having some profit pressures when it comes to their margins and that kind of stuff, and so they're getting beat up pretty bad today, down a little over 9%.
And that's not good news because, once again, that's ancillary to the housing industry because a lot of the individual local contractors buy from stores like Lowe's and Home Depot. So another data point on the housing front, right?
I think it is, Dave. I think you're right. That is where the local contractor goes and gets their supplies for contracting and building, and so it does play a role. Now, Lowe's is both in the home kind of improvement area, but they're also in the retail area. So we've got a lot of retail came out today. We've got Target. They came out. They beat by about 10 cents a share. Revenue was ahead of forecast. Their same-store sales beat by about 0.6% better than expected. And so good things there when we look at how well Target's done. And, it's getting rewarded today. It's up almost 7% this morning.
Kind of good to hear that because the retailers I had yesterday, for the most part, it was bad news. So one big retail name succeeding is good news. I'm going to bet you a nickel that you probably don't have too many other retail success stories today, do you?
I don't, but I'm going to give you the one other success story I do have. It's a very niche type retailer. It's Advanced Auto Parts.
Ah.
Advanced Auto Parts came in 10 cents a share ahead of estimates. Their revenue beat forecast, their same-store sales, I don't know what the number was, but it increased pretty good. And so we've got Advanced Auto Parts trading up about 2.5% this morning.
They're on my winners list this morning.
Are they?
Good. Nice to have a reason for the green ink, isn't
it? It really is. Now, the rest of them, I've got some good news, but none of their stock prices are reflecting that good news. So let's just kind of go through that laundry list. We got VF Corp, which I don't know, people don't always recognize that, but that's North Face, Van Shoes, those type of clothing companies. They earned 60 cents a share, which was 2 cents above estimates. Revenue was strong. They had good revenue because of the two brands I mentioned. Their outlook, though, came in below what the street was looking for. Now they are divesting themselves of their blue jean company, so they're selling that one off, and so they're down about 5.5% this morning.
That's not a happy bit of news. I know you mentioned Nordstrom's earlier before we went on the air. Do we have a report from them, or are they getting dragged down by everybody else?
No, they had a big miss today. They missed by 20 cents a share, almost 50% less than what was expected. They came in at 23 cents a share. They were expected to come in at 43 cents a share. Revenue came in low as well. They say they got hurt by the slower sales of full-price women's apparel. Everybody was looking for sales, I guess, and so the full-price stuff just didn't go. Plus, I guess they put into place a new loyalty program, and so that's costing them some expense on the other side. And so they also cut their full-year forecast. So all that adds up to not a good day for Nordstrom. They're down 10.75% this morning.
What really scares me is they were surprised that women were looking for sales.
Yeah, really. Hey, the other thing is, though, at where they'll open up today, Dave, they will be at a new 52-week low by about 10% off the current 52-week low.
Oh, good heavens. Yeah, when I start seeing double-digit pre-market losses, and I knew they were off yesterday, too, that I was kind of writing off to sector woes. That's not good news for Nordstrom's.
Yeah.
Any other
I do.
week?
The last retailer I have is Urban Outfitters. And so Urban Outfitters, they beat estimates by 6 cents a share, which was good. Their revenue was ahead of forecast. They saw stronger than expected sales in both of their chains, their Urban Outfitters and their Anthropologie chain. And they announced this new thing. I thought this was kind of interesting, an $88 per month clothing rental service. So it looks like they're being innovative. They've got some new things coming. So you can imagine my surprise when I looked at the price this morning, and they're down almost 4.5%. And I did dig a little deeper on Urban Outfitters, and it looks like there's been some price cuts on their stock. So two analysts, two trading factors, and they've lowered their target price on Urban Outfitters. So I think that's what's playing into their price this morning.
More, it's just financial factors than it is the actual performance of the company, it sounds like.
I think so. And the last one I want to lead you with, just because this one got beat up really bad, is a company called Pure Storage. They're a data storage company, so they store your data for you. I'm sure they're mostly in the commercial business line, but they lost 11 cents a share, which was 3 cents worse than anticipated. They missed on revenue, but they're down 18% this morning.
Yeah. Maybe they better go into data disposal.
Yeah, they need to find something to revive themselves.
It's time to find a new line of work. I'm still memo to Nordstrom's. Women like sales. Okay, setting up the table for this morning. Yesterday was an up day on some hopeful news on the trade war front. Dow was up by 197. NASDAQ up by 83. Standard & Poor's up by 24. Everything up by close to 1% yesterday. That's normally a harbinger of a turnaround the next day, and I fear that's the case today. Phillip, which direction are we going?
Yeah, we are going in the red direction today, giving back some of those gains that we were able to get yesterday. So we've got the Dow down 100 points right now, the S&P 500 down about $12.60, NASDAQ down $50.50. So gold and silver up just a tad, but significantly off their numbers we look for. Gold's down to $1,276 an ounce, and then silver is down $14.47 an ounce is where they're sitting at, and we like that $1,500 and that $1,300 mark on those two. Crude oil is trading down about 1.4% this morning, down to $62.25 a barrel.
Go, go, go. Speaking of down, the Chinese markets were down overnight. Nikkei in Japan was up by a tinge on their own internal issues. Europe is mixed halfway through their trading day. Phillip, I need advice to make my retirement secure. I'm tired of sweating this volatility. How do I find you on the phone?
Well, that's one indication that you need to get our financial x-ray report, and to schedule that review, call us at 382-0037. Follow us on our Facebook page at Statler Financial Services. We repost a lot of information there. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
And I do appreciate it, sir. Just a reminder, News Talk 730 streams 24/7 at newstalk730am.com. That includes the Statler Financial Radio program. Phillip, thank you so much. We'll catch you in the morning, all right?
All right, buddy. Thanks. I appreciate it.
Thank you much. Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Stop.
Hey, again, I want to thank you for joining us today. I hope that today you got something out of the show when it comes to the markets and earnings and just all the broader stuff that we talk about. So, but again, I want to remind you of our free report on understanding market corrections. We're seeing a lot of volatility out there. I think it's important that people understand what's happening. All you have to do to get your copy is text the word market to 863-285-3815. Text the word market to 863-285-3815. Thanks again for joining us today. Hey, I look forward to speaking with you again tomorrow.